Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the gosh darn Dividend Diplomats. We're going to be talking to you today about this company that has an 8% plus dividend yield. They have a PE ratio that's very low, just above 10x. Oh man, everybody, is this 8% dividend yielding stock a stock to buy right now?
Smash that subscribe button, guys. Give us a nice thumbs up. 8% high dividend yielding stocks here. What the hell are we talking about here on today's video? Not only will we be talking about that stock, but we're also going to benchmark it against a stock that yields 7% and possibly a stock that this guy owns. And man, that share price has definitely swelled up over the last couple of years as well on that stock. But it'll be a good benchmark to see if this 8% plus yielder is a stock to buy.
Who are we talking about, Lanny? Ares Capital, ticker symbol ARCC. Yes, the business development company that focuses on the middle market. Ares, however you pronounce it. I'm game for it. All I know is I hear Ares equals 8% yielder, baby, and I hear that cash just flying in the door. That's all I hear.
They just say, give me that cash monies.
Yeah, we threw this out on X. We asked, are there any comments that you want, any stocks you want us to look at on the old YouTube channel here? Someone threw this ticker out there and it looked fun. So you know what? We're going to take a little bit of a deep dive here. So who is Ares? They focus on, again, those middle market companies. So they'll work with mezzanine debt, senior debt, buyouts, debt restructuring, all kinds. They help serve that underserved middle market company, much like Main Street Capital, ticker symbol MAI. And that's the stock that Lanny loads. And we'll bring their metrics in when we run Ares through the Dividend Diplomats dividend stock screen later.
Yeah, guys, let us know, which one of these high yielding stocks you do own before we dive in. And Brett, I have to ask: is ARCC a monthly dividending stock?
That's a great question, Lanny.
You able to do a spot check on that?
Yeah, well, I don't believe they are, but we'll do the spot check. And the reason you're asking is because Maine is a monthly dividend company. Ares is not a dividend. They're a quarterly dividend payer. They pay in that third quarter every single month. And the other thing, when you're talking through dividend history, we know Maine has that special dividend, that periodic special dividend that they pay once or twice per year. Ares, they haven't done it over the last few years. They did, the last one they did was in 2022, 2019. So it looks like every few years they drop in a couple of special dividends. So that's a huge differentiator on the dividend front. Ares, a little bit about them. They have 535 companies that they work with in their portfolio through their different types of ventures. If you look at them, they're pretty evenly spread across the country. 24% are on the West Coast, 24% are in the Midwest, Southeast, Mid-Atlantic, Northeast, all are in the teens, international. So they're not really locked into any one specific sector within the United States. They're spread pretty evenly across the country.
Yeah. And again, guys, business development companies, they're there to hopefully help get the most value out of their portfolio companies. Maybe keep them on for a handful of years and maybe divest after their time is up from owning those businesses, guys. And keep this in mind. All the income, the dividend income you receive is not taxed as a qualified dividend. It actually ends up being a tax at your ordinary income rate. So there's a little bit of fun when it comes to tax time regarding that dividend income that you get off of that. Wow. But I mean, pretty solid from a size standpoint for Ares. Again, fair value of those investment portfolio companies over 25 billion. I'm sitting there on the balance sheet. It's pretty solid. It's pretty big.
Yeah, and that's up from 22.8 billion last year as of September 30th. And how that flowed through their earnings, their investment income was up to 361 million in Q3 compared to 289 last year, which makes sense given the fact that they had significantly larger investments. Interestingly, though, GAAP net income was down, Lanny. It was only 394 million in Q3 compared to 500 million in Q3 2023. So see the top line grow, bottom line decrease. There's some extra noise going on in the middle here for Ares that everyone needs to keep an eye on as we're watching.
I mean, adding 23 new companies in their portfolio during the year is quite a significant move. You're doing a couple of new companies every month, which is fairly wild. Seems like they've been very active in the space of growing their portfolio companies, which is great for investors because you don't want them to lull. You don't want them to hold on and have nothing to replace those businesses that they're exiting. So it's always nice to get fresh capital, especially if they're able to increase the value of those companies.
Yep, that's absolutely right. And then when I read their earnings release, they said M&A, Lanny, there's just going to be more of it. We talked about this yesterday in the banking sector when we talked about how banks may benefit here from this new administration. Other sectors are going to benefit as well. So more acquisitions, more noise. That's great news for companies like Ares. That's great news for companies like Main Street, because chances are the middle market might be getting acquired. There might be a lot of fee income that's going to come from bringing somebody in like Ares to help make the transaction happen. So that's always good news for these types of companies.
Yeah, if you look at the top, industries that they have, 25% based in software. So you already know that there's a lot of players to be had in that pond. And then one of the most talked about industries because of the new administration, healthcare is their next largest at 13%. So maybe we see consolidation because there's better value out there in that space. So it could be a very busy 2025 for ARCC.
Yeah, so let's run them through our screener that focuses on the price earnings ratio, payout ratio, history of increasing dividends, and the dividend yield. Again, we're going to take their metrics. We're also going to bring in Main Street Capital here just to have a comparison, see how they benchmark within the sector.
Interesting.
I can talk about Ares. You can talk about Main Street, Lanny, which seems very appropriate given the fact that you are a Main Street shareholder, which kudos to you, by the way, for making that investment move last year. That was a pretty...
Should have done more. This shoulda, coulda, woulda right there.
Well, at least you have some. I have none because I sat on the sidelines while I was watching you join that party. So let's talk PE ratio. ARCC, price 23.18. Forward earnings per share per Seeking Alpha are $2.21. Price to earnings ratio 10.49.
That is
it's low.
Main, ticker symbol Main.
Love it.
Trading now back over $60 a share. Just a week or two ago, they were actually at or below 57. So they have come up quite a bit. Earnings right now, though, is looking to be maybe around at $4. So you have about a 15 PE ratio for Main Street Capital.
Yep. Let's talk about that dividend here. Let's look at the payout ratio here. Again, business development, you're going to be expecting a much larger annual dividend. We're going to be expecting a much larger payout ratio for that regard because they're paying out such a large amount of that income. Their annual dividend is $1.92. That gives you a payout ratio of 87% for ARCs.
Nice. When it comes down to the dividend for Main, remember they pay monthly, guys. So when you actually look at that activity for Main paying every single month, or what is that monthly dividend at right now? I'm doing a quick discount double check. They pay a quarter every month. Yep. So their normal dividend, is 0.25 times 12. They pay $3 in normal dividends. So the normal payout ratio is about 75%. 3 divided by 4. And then when you add in a couple of those quarterly specials, you get to over 105%.
Yeah, that brings it closer to $4 when you bring in those extra special dividends. So remember, special dividends are just that. You don't have to pay out a special dividend, although Main shareholders are accustomed to that special dividend getting in there. So
don't get too get comfortable with the uncomfortable with Main, I guess.
So to your point, their dividend payout ratio is a little bit more of a range, 75 to 100%, depending on how you want to factor in those special dividends. ARCC is in a similar, they don't pay a special dividend, but they're right smack in the middle of that range at 86%. So, interesting. Yep. Dividend front, ARCC.
Dividend growth. What's ARCC looking? ARCC, is that what we're calling them?
I don't know. Ares Capital, ARCC, I think they're both hilarious. 5-year for different reasons. Dividend growth rate. They claim they have a 5-year dividend growth rate of 3.71%, but that's very misleading. They haven't grown their dividend since 2022, Lanny. So that 5-year, the only reason Seeking Alpha said it's a 5-year growth rate is because those first few years they had something.
Dang. Well, Main's been on the prowl for the last few years, around 3.5% to 4%. They usually grow their traditional dividend. I think they may have done like half a cent to a cent in 2024. It's harder for me to pay attention to the monthly dividend payers because there's something that comes out every month.
Yeah.
But yeah, they've increased it anywhere from 3 to 4% per year.
Yeah. So their dividend, ARCC Ares, we talked about them, 8.28%, which is below their 5-year yield of 9.29%. So Pretty high. That 8% yielder. Maine, Lanny, how do we look at? Let's look at the range here for Maine, given those two dividends. What's that
So
based on?
Maine, based on that normal schedule of 25 cents a share per month, you're at about a 5%
Okay.
dividend yield, which I still consider a high yield. But as Bert said, if you add in a buck 20 on top of that, if you're at that $4.20 mark, if you add in those special quarterly dividends that they do, your yield goes up from 5% to 7%, guys. So definitely much higher from a yield standpoint. Not quite as high on arcc with over 8%, but your range right now is 5 to 7% for Main Street Capital.
Yeah, so let's look at performance here now. Aries, year to date, up 6% so
Ooh,
far, up
ooh.
13% in the last 52
Why
weeks.
not,
Five,
arcc? Let's
yeah,
go. Make some
yeah,
noise.
5 years, 22.26% increase. How does that stack up against Maine, Lanny?
Oh man, well, Maine is actually still up this year, 2.5%, not quite the 6% that arcc is, but they are up 36% in the last year, and they are up 35% as well over the last 5 years. They had, I remember when I started buying them in 2023, they were in like the mid to upper 30s, low 40s. So, I think they were hanging around there for quite some time. And really in 2024 onward is where they really had their appreciation.
Yes, they did. They caught and they passed up Aries because they're crushing them on the 5 year mark. From a market cap standpoint, I didn't realize these companies, the size of them, Aries is nearly triple the size of Maine. They have a 15 billion market cap compared to five of Maine. So I think that's interesting.
Size doesn't matter, right, guys? No, kidding. But Main Street Capital, guys. I mean, again, 5 billion in market cap. Again, only a third of the arcc size. But we're going to throw up both metrics here. Again, arcc's got the lower PE ratio. Both have very similar dividend payout ratios, just depending on what range you use for Main Street. For BDCs, they return most of that investment income back to the shareholders. So I don't think either or from a regular dividend scares me. Now, Maine, you might not get that special dividend always where it is. It's very rare that they go back. They go backwards, but they should when they shouldn't go over the 100% mark. Um,
Yeah.
but Bert, I mean, hey, both have some sort of track record of increasing dividends, albeit maybe arcc is quiet right now,
Yep.
but they probably make up for it with that high yield of over 8%.
Yep. They definitely took the special dividends out of the equation, just put that into the regular dividend. So it's much more predictable. They haven't increased it, obviously, but with 86% payout ratio, I don't know how much you really want them to start increasing that dividend, especially if there's going to be any kind of uncertainty of what's going to be happening over the next few years and how policies are going to shift and change. Because these mid-market companies, and why I'm not running to buy them right now. So I think I would just say right now, I'm not buying them. I should have bought Maine, missed the boat on Maine, pissed off I didn't buy Maine. It is what it is. Aries though, like you're talking mid-market companies, there's going to be a lot of like globe shaking up of what's going on with some of these sectors. Who's going to be,
Wayahanda.
yeah, you don't know who's going to be impacted by potential tariffs. You don't know who's going to be impacted by different types of laws. I'm just avoiding this for now until you see a little bit more news. But if they drop below $20 per share, that might be a different story here for Aries. So if there's a 10% plus drop in this company, that yield goes up even higher, Lanny, then we're talking some business here. And maybe it might be time to throw some shekels at them.
So there's Bert's take, regarding arcc. I'm obviously not buying arcc because I own Maine, and Maine I'd be looking to buy, at 55. I need a little bit of a discount right now to buy more Main Street Capital, guys. Let us know though. Are you guys buying arcc? Are you guys buying Main Street Capital? Which one do you already own? And what other investing are you doing in 2025? Shout it
Yep.
out in the comments.
And before we give our send off here, we're going to ask you, Lanny, for our video on Thursday. You want to give a little bit of preview for the people that are still hanging around here? What can they
A little
expect
bit of
on
preview.
Thursday? Yeah.
Thursday, guys, you don't want to miss Thursday's episode. We're going to have a little chat just regarding my Vanguard strategy, the Vanguard trifecta. Might make some small tweaks, but at least here to talk about what I'm still possibly doing here in 2025, guys. So don't miss Thursday's episode.
Yeah. Will the trifecta, you betcha, get tweaked? We're going to find out here on Thursday. But everybody, right now, subscribe to the channel. Give this video a thumbs up. And remember, You're either with us or you're against us, Jack.
That was Bert the Hurt and Laney from the Dividend Diplomats, over and out.